From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 2nd, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the 7 U.S. currency pairs, the major U.S. currency pairs, in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Today's news calendar for the U.S. trading session is relatively quiet, but we do have some events this week that could spur on some market movement, and you will want to make note of those on your own financial calendars throughout the entire week, going all the way into Friday with U.S. non-farm payrolls. All right, let's get started here with the Usdchf, the U.S. dollar versus the Swiss Franc. We're looking at the daily time frame. In the live daily trade room, we've been discussing this downward-facing channel here. The two red trend lines that you see here on my chart, downward-facing channel. Throughout the past couple of weeks, we've been studying the rising within that pattern. Previously, along the blue trend lines, we saw it find a low along the bottom and rise all the way to the top. In a recent pattern, we saw it find a low, but not making it quite all the way to the top of the pattern, and now falling back down towards the mid 9500s. Of course, that doesn't mean we have turned all the way back down. We're going to see it go all the way back down to the bottom, but definitely something to take note of is the fact that we have not completed the pattern this time so far and moved all the way to the top of the range. If it starts to go bullish again, we would of course look to target back to the top of the range. But currently, last week, the market was clearly bearish here for the US franc. Of course, like I said, we have news events all this week that could change everything that we're looking at here on this currency, but definitely, at least at this current point, we have a bearish momentum built into the market. Let's go ahead and zoom in a little bit here on the daily time frame. 1, 2, 3, 4, 5 days in a row it's been going down. Doesn't mean it has to continue down, but definitely something that you would take note of. If you're looking to sell in this direction, there's two reasons to sell it. I think, first off, you would look for it to come back up here into this pink zone close to the 9600 level if you're looking to go short. I don't think at the current moment it's a good idea to go short because we're clearly into the support level, into the mid to upper 9500s, the green shaded area. So currently, the green shaded area is our support. If you're looking to go short again, it either needs to go up to the pink zone or break through this green shaded area. And then we can look for it to tackle the next support, which is down here at the purple shaded area. If we start to see some evidence of reversal, maybe a break above the pink zone, we might look for the bullish action to return, but currently bearish, and I think that's probably the direction, at least for the first part of this week, that we'll continue to focus our efforts on. Down here to the 4-hour time frame, you can see it's kind of stuck right now between the pink and the green shaded area. So what I would expect that we're looking for is a breakout of this congestion that we're in right now. Above it may start to signal the upside again for the US franc. Below it, as it is right now, and getting below the green shaded area, further movement down towards the 9500 level will likely be expected. So watching for a breakout of this congestion will probably be your key to direction for the US franc this week. Moving on to the EUR USD, Euro versus the US dollar, we have been studying the long-term range. Let me zoom out to the weekly chart real quick, and you can see that range, the red box that's here on the chart. So I definitely want to make note of that again today. Downtrend 2014, since January 2015, we've been stuck inside this range, the red box. Now, I don't think we are, can satisfactorily say we're outside of it. Now, we are price action-wise outside of it, but have we broken it? We've seen it open above the red box before. You see it over here on the left hand side. We've seen it tackle up here into the upper 114s towards 115 before, and then reverse and go back down. So until this really has a satisfactory clear clue to a breakout here, I think we have to watch for the potential of reversal here for this currency pair again, just like we did back here on the left-hand side. Daily time frame doesn't really change that a lot. We see it challenging back up here at the pink zone. Again, we've seen that before. Take a look over here on the left-hand side, just underneath the 115 level. It found resistance and then suddenly turned around and went back down. So we can't really call this a breakout yet, I think, until we get through the 115 level. Maybe if you're going to buy this currency pair, it needs to get through the 115 level, the pink zone here, or it needs to dip back down to the green zone. Those are your reasons to go long. I would never suggest going long at the top of this trend and really into our resistance zone that we're at right now, into the 114.15 level. So at least at this point, it's not a buy scenario, but dips to the green zone, back to 114, or back above 115, the ping zone could be a buy scenario for you. Otherwise, I think for at least for this first part of the week today, we're looking at potential clues for resistance and reversal from the pink shaded area. 4-hour time frame, I don't think we have any evidence of reversal yet. We do have a little bit of gap here, but that's likely been filled. Definitely watching at resistance for resistance right here at the pink shaded area today underneath the 1480 1500 level. If it continues to find resistance, we'll target back down here towards the green shaded area. I'm not in a short right now, but definitely watching for opportunities. We do have a little bit later on today, coming up at 10 a.m. Eastern US time, ECB President Draghi speaking, so that may have some influence whether this goes up or down today for the euro dollar. Moving on to the GBP USD, important to note that we do have a UK bank holiday today, so it could we have less volumes of traders in the market today. But definitely a thing to note here on the daily time frame is this black box, and for the past 1, 2, 3, 4, and now the 5th day, we're inside this little period of congestion, the black box that you see here on my chart. A break above it signals higher, break below it would signal lower, but we need a breakout. So definitely right now cautious about buying this currency pair, because 1, 2, 3, 4 previous days have found resistance underneath the 44.60 level. So I'm not really keen on buying it right now as long as it's inside here. The reason to buy it would be a breakout above it or a dip back down to the bottom of that black box in the orange shaded area. So if you're a buyer, and that's clearly the direction the market is going in, you want to wait for the breakout above 4660 or so for the continuation of the uptrend. Take it down to the 4-hour time frame. Again, we're there. Let me squeeze this out a little bit so we can see this better. There's that same black box. There's the same pink shaded area. We've seen it touch the top here, 4660 before, and then reverse. So don't get too excited about buying this yet until it breaks through that level. To me, a breakout is a single candle body that opens and closes above a resistance. So that's what I'd be looking for here on the US or GBP USD. Moving on to the USD CHF, clearly a downtrend. We've been focused in on the downtrend for quite a long time in the live daily trade room. That's the direction we want to trade it. However, it doesn't matter if you're selling used cars, t-shirts, candy bars, or currency pairs. It's not very prudent to sell something at the very bottom of the trend, the very lowest price it's been for multiple months. So if we're going to go short here on this currency pair, indeed, I think it needs to go back up a little bit to give us a better price for our investment, or at least give us a clue and a signal to a breakout lower. Right now, 25.15 or so, 1.2515 is holding our support. That's the red line that you see at the very bottom of the chart. Zooming in a couple of times, nothing really new here. 1, 2, 3 days now finding support here. We know that the green zone is support. It will need to break that if we're going to go short again. Or like I said, the reason you go short on anything or sell anything is it goes up to a higher price. So at least at this point, it either needs to go back up to the pink zone that sits up here closer towards where this red trend line is, or it breaks through the green shaded area. I see no evidence or reason to go long on the US CAD, but definitely watching for opportunities on rallies to resistance or breakouts underneath support for the continuation of the downtrend for the US CAD. Moving on to the USD JPY. Again, similar to what I just mentioned on the US CAD, difficult to suggest selling at the very bottom of the trend, the lowest price it's been for multiple months. However, any rallies back into resistance become an opportunity or a breakthrough support. Let's go ahead and zoom it on down to the 4-hour time frame, because last week we found some support here. After the significant fall after the BOJ last week, we found support here. 1, 2, 3, 4-hour candles finding support right about or just above the 107 level. Now we're underneath it. So that same area of congestion and support, the 107 level, becomes that opportunity on any rally to resistance to potentially take a short. Now there's a good chance it could also take a turn back to the green shaded area where these historical supports were on the left hand side, but one of these two areas, either 107 or into the upper 107s, become our resistance for the day today. We don't really want to go long. There's no evidence of reversal here yet for this currency pair to go long, but definitely watching for opportunities on rallies to resistance to go short here. Not really a great opportunity on the breakout of support, but if it does break through 106, I think back down here into 105.30, 104.80 becomes our next target, all the way down to this blue shaded area here into the 105 level or so becomes our next target lower. So rallies to resistance become selling opportunities until we get some evidence and clue of reversal here for the US yen. Moving on over to the AUD USD, Australian versus the US dollar. We do have some significant interest rate news later on this evening or morning, depending on where you are. 12:30 a.m. is the list on the Forex Factory calendar for the rate information out of Australia. If it's a surprise, if it changes, surprise change, or their statements to hawkish or dovish tone by the RBA, we definitely would watch for changes in this. But currently, we have seen, of course, a long-term uptrend. We've seen a resistance high, and now it's broken back underneath historic resistance levels. The red circles here show you where 3 resistance levels are, is broken back underneath there. That's right around the 7,700 level. So right now, 77 will be a key point to watch. 7,700 as resistance, 1, 2, 3 times over here on the left. A break through that resistance and 7,700 above there, we likely look for the turn back higher again. Again, watching that interest rate news today could be a key player here for the Australian dollar. 4-hour time frame, we could see the pattern so far has been it broke, made a new high, then all of a sudden it started making a new lower high. One lower high. Now we're looking for the potential of a new second lower high, I guess I would say. 1, 2, and now the third lower high. But anyways, we're looking for resistance here into the green shaded area, 7,700. That becomes a potential selling opportunity with fairly minimal risk. If it breaks 77, you don't want to likely stay in it very long, likely going all the way back to the yellow zone or higher if it breaks 77. Again, interest rate news today will be a key player here for the Aussie dollar. But resistance becomes an opportunity to go short. Break of support, which I think right now would be the opportunity down here at the pink shaded area. Really no reason yet to go long. I think the first opportunity to go long would be a challenge above 7,700 and the green shaded area. And of course, interest rate change this evening, a surprise interest rate change, may change everything we just spoke about here on the Australian dollar. But at least at this current point, watching 7,700. Moving on to the NZD USD, New Zealand dollar US dollar, we could see the rising trend channel we see here, the red trend lines that are on the chart. We've been studying that in the trade room over the past several weeks, but dips to support, breaks of resistance become opportunities to go long in that channel, but watching for resistance, of course. Clearly, the last time we challenged here into the mid 7,000, 7,050, 60, we found resistance at the purple shaded area and reversal. So as we approach 7,050 or so, we'll definitely watch for resistance. Let's zoom it in a couple of times here on the daily time frame. Again, look at that purple shaded area right here. Found resistance, significant reversal. We're approaching it now. The closer it gets to 7,050, I would be discouraged about going long here on the New Zealand dollar. The closer it gets to 7,050. If you're going to go long, look for the orange shaded area to be your very best opportunity to do that for the day today. So back at the orange zone, 69.80 or so, 69.50 becomes an opportunity to buy towards 7,050. You've already missed it for the day today, likely. As it approaches 7,050, resistance and reversal will be what you're watching for. 4-hour time frame doesn't really change it, except for the fact that here on the 4-hour time frame, sorry about that. Let me get that put back out here like this. Except for the 4-hour time frame, we've now seen some candle bodies open and close above the orange zone, again giving you a little bit more confidence in the continued rise. So if you're looking for an opportunity today, at least closest opportunity, I think a dip to the orange zone becomes a buy scenario targeting the purple zone. Otherwise, hitting the purple zone becomes an opportunity to look for resistance and reversal for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.